So good to have you join us today. Hello and welcome to the program. I'm Lee Ji-yoon in Seoul. Coming up on today's edition of Business Daily. With less than 2 weeks left until U.S. President-elect Donald Trump takes office, Samsung and LG Electronics are exploring options of building new production lines in America. Facing a trend of climbing prices despite slowing growth, the term stagflation is weighing on the minds of many here in Korea. We sit down with an expert to talk about this. Korea is facing the risk of losing further growth momentum as private consumption remains on wobbly grounds. The finance ministry said in its monthly economic report that while industrial output in November grew 3.4% on month and construction investment surged to 6%, retail sales posted negative growth. Figures dived to 0.2% in a sharp turnaround from a 5.2% gain in October. Consumer sentiment also dropped to a near 8-year low in November, hit hard by a local political scandal, which discouraged spending. Looking ahead this year, the ministry said it will boost expansionary fiscal policies to counter some of the external and internal factors and lift growth momentum. Korea's biggest commercial banks have announced that they will extend substantial funds to business owners and smaller firms facing financial constraints in light of the upcoming Lunar New Year holiday. According to industry sources, 5 commercial banks, including KB Kookmin, Shinhan, and Uri Bank, have agreed to provide a record $35 billion by mid-February in the form of new loans and extended maturity on existing debt. Now, that's about $5.8 billion more than the amount banks offered during last year's holiday period. This comes as many self-employed Koreans face a growing debt burden amidst the economic downturn, with income remaining stagnant. Foreign investor appetite for Korean stocks has not been dampened despite the strengthening of the U.S. dollar on the back of the Fed's rate hike. According to Korea Exchange on Tuesday, foreign investors have been net buyers for the past 9 sessions. The total market cap of benchmark Kospi shares held by offshore investors shot up to 466 trillion won, or $389 billion as of Monday, the second highest ever. At today's close, the Kospi shed almost 0.2% to close at 2,045.12, while the tech-heavy Kosdaq lost over 0.8%, coming in at 636.73. Meanwhile, overnight, U.S. markets showed mixed performance as the Nasdaq reached a record-high close, continuing its run with gains in healthcare and tech stocks, while the Dow and S&P 500 both fell nearly 0.4%. The biggest automaker in the world, Toyota Motor, has revealed its plans to invest billions of dollars in the United States as President-elect Donald Trump continues to pressure foreign companies to keep production in the country or bring it back. And Korean companies such as Samsung and LG are also exploring the possibility of building plants in the U.S. Our Lee Joo-young has more.
Toyota will spend $10 billion in U.S. capital investments over the next 5 years, which amounts to the automaker's investments during the previous 5 years. At the North American International Auto Show in Detroit on Monday, Toyota's North American chief executive Jim Lentz said the decision was made in order to meet demand and upgrade plans to build more fuel-efficient models. Toyota has come under fire from President-elect Donald Trump for its plans to shift the production of its Corolla to Mexico. Lentz said the decision was not in response to Trump's recent tweets, but was part of Toyota's business strategy to invest in the United States, where it has 10 plants in 8 states. The $10 billion investment includes the construction of the Japanese automaker's new North American headquarters in Texas, as well as making big improvements to its existing plants. Lentz said Toyota plans to expand some of its U.S. plants over the next 5 years, but declined to say if that would boost jobs. In Korea, the country's major electronics companies are looking to build respective factories in the United States as well. On Sunday, LG Electronics CEO Cho Sung-jin confirmed that the company is in the process of deciding whether to build a home appliance manufacturing plant in the United States, especially looking into how much of its production process should be moved to the U.S. A spokesman for Samsung Electronics also said the company needs to do something following Trump's Made in America pledge. He said Samsung is considering building a new manufacturing base in the U.S., adding that they are narrowing the list of candidate locations for the new site. Lee Joo-young, Business Daily.
Now, with tech companies battling it out in the market and in the courtroom, a latest study shows that Korean tech giant Samsung Electronics has earned over 5,000 U.S. patents last year, coming in second, while its rival Apple failed to make it into the top 10. Our Kim Hae-sung has this report.
In the 2016 patent race in the United States, Samsung Electronics placed second. According to US-based IFI Claims Patent Services on Tuesday, Samsung won over 5,500 patents in the US last year, a near 9% increase from 2015. The Korean tech giant's position can be attributed in part to its spending on research and development. Samsung spent over $14 billion on R&D in 2015, making it second only to Volkswagen according to PricewaterhouseCoopers, and it applied for patents related to smartphones, smart TVs, and memory chip products. US tech giant IBM ranked number 1. IBM saw the number of patents it earned increase nearly 10% from the previous year. It secured over 8,000 patents in 2016, or close to 22 patents a day. Over 2,700 of the company's patents were in the fields of artificial intelligence and cloud computing. The other companies that made the top 10 in 2016 included Canon, Qualcomm, Google, and LG Electronics, which ranked 7th. Apple was edged out of the top 10 and placed 11th. According to IFI Claims, 2016 saw the most patents granted in a single year, with over 30,000 utility patents granted. IFI Claims Patent Services CEO Mike Baycroft said Asia as a whole continued to make impressive gains with U.S. patents, and that Korea, China, and Taiwan are likely to capture an even larger share of the U.S. patent market. Experts say the number of patent applications is growing as companies try to respond to a growing number of patent lawsuits. Kim Hae-sung, Business Daily.
Stagflation is when the economy experiences stagnant growth, high unemployment, and high inflation. The term was born out of the prolonged economic slump of the 1970s, when the United States went through high inflation in the face of a shrinking economy, something that economists had previously thought to be impossible. Now, this is because a sluggish economy tends to come with lower demand, which is usually enough to keep prices from rising. And what's concerning now is that prices of consumer goods have been climbing here in Korea, despite the country's prolonged low growth, leading many to question whether Korea is headed for stagflation. Let's take a closer look.
With a little over 2 weeks left until the Lunar New Year holiday here in Korea, people are feeling the pinch of rising food prices. According to Statistics Korea, the consumer price index last month was up 1.3% from the year earlier, with prices of vegetables, eggs, instant noodles, soft drinks, and beer all rising over the past 6 months. And not only is this putting a heavier burden on consumers already hit by the fallout from the country's worst bird flu outbreak, it's also raising concerns about potential stagflation. Adding to these concerns are climbing oil prices. OPEC member countries agreed to cut production levels this year, which means global crude prices are likely to become a key variable down the road. With the Korean government having slashed this year's economic growth forecast to 2.6%, what can the country do to avoid falling into stagflation?
And to tell us more about this, Professor Yang Jun-suk from the Catholic University of Korea joins us in the studio today. Great to have you here.
Happy to be here.
So exactly to what extent have prices risen over the past couple of months? I mean, we have seen a notable surge in prices of daily necessities and also groceries, right?
Right. Well, it's mostly taking place in terms of groceries and fresh food. Things like kimchi cabbage, kimchi beets have gone up almost double or even more than double the price it was a year ago.
Wow.
And then squid prices have risen up a lot, and eggs have continually been in the news. But if you look at the monthly changes, according to the according to the National Statistics Office, this is not unusual around the time of the Lunar New Year or Chuseok. We don't have the January's numbers yet, sadly, but if you take the December numbers, the price of fresh food has gone up by about 3.5% overall. But if we look at some of the older numbers here, around September last year, around the Chuseok time, the price of fresh food went up compared to the month before, 14.2%.
Wow.
And then in February, that was when the Lunar New Year was last year, it went up by 8.4%. And then in 2015, Chuseok time, prices actually fell, so that was a bit lucky on that that time. But Lunar New Year, January, went up by 6.3%.
Wow.
So a price rise around this time is not unusual, and we have been hit by a lot of supply factors. We mentioned the avian influenza for the eggs, but there were also unusually high temperatures last year, which affected vegetable production, and Hurricane Chaba, which affected vegetable production in the Jeju area. So those type of supply factors, coupled with the Chuseok and lunar holiday demand, which really affects limited number of products, I think those are mostly responsible for the high price rise that we've seen at this time.
Now, aside from those factors that you just mentioned, what about oil prices? I mean, how has the rise in oil prices affected prices here in Korea?
Okay, well, the oil prices, we've seen it go up on the pumps. We haven't seen it really affect the consumer price index inflation that much yet. But we are afraid of the oil price rise because, well, as mentioned in the report before, the classic cases of stagflation took place during the 1970s, and it was triggered by the two oil shocks that we had at that time. Now, because these are supply side inflation, it may be coupled with recession as well, so that's what's very worrying about it. But so far, we haven't seen it hit too much. And remember, just last year, we've been concerned about low inflation, we've been concerned about possible dip into deflation, and the two biggest factors behind that were energy prices and fresh food prices. So in a sense, you can sort of think of this as returning to the average, returning to the mean, but we'll have to see whether this trend continues after the Lunar New Year, when the demand for some of these vegetables stabilizes, and see whether this price trend is something that's more permanent or whether it was just a temporary spike like we've seen for the last 2 years.
Now, the exchange rate is something that could also affect local prices, right?
Right. One of the complaints have been that not even the domestic food, but also imported beef, imported foodstuff, price for that has been rising as well. And that can be attributed to the weakening Korean won.
Now, Korea's central bank said last month that it plans to push inflation to reach its target of 2%. Now, at this point, I'm wondering, how is this target of 2% set, and what does it mean?
Okay, well, 2% is not a magic number. It's just the numbers that the central bankers around the world agreed that this was a good number to set at. And the reason is that, high inflation obviously is bad for the economy, but they also want to have some room to cut interest rates. Part of the interest rate that we see is compensation for inflation. So the higher the inflation is, the higher the interest rate tends to be.
Right.
And when you have 2% inflation plus what we call the real interest rate, that gives maybe about 8 to 12 chances to cut the rates. So previously, we thought that 2% inflation rate would be sufficient to have enough room for a good monetary policy, good chances for rate cuts. But now there's been some movement towards some academic economists that perhaps 2% is too low because we've seen that the so-called new normal after the global financial crisis, we may have to cut interest rates a lot more than say about 8 times. So Right now, there are some discussions on whether we should raise the target interest rate to 4%, but we should raise it up to 2% first.
Now, with all this in our minds, what are your thoughts on the stagflation concerns?
Okay, right now the price of high fresh food prices seem to be due to supply factors more than demand factors, and there's oil price increase, which is worrying.
Right.
But we should first see whether these trends are permanent, and that means we have to wait for a couple of more months to see whether increase in these prices stand, especially for the agricultural goods. And then if it does turn out to be stagflation, which we should not really worry about too much yet, but if it does turn out to be stagflation, then we should think about increasing demand. Monetary policy is not really good for that because it can either cut inflation and worsen the recession or increase inflation while trying to lessen the recession. So you have to choose one or the other. But fiscal policy has more room in these cases. So this is another case for more fiscal policy.
No, I mean, I think these concerns come amid increased economic uncertainty, especially with an absence of a control tower for the Korean economy. So what are some of the things do you think that Korea could do in order to keep itself from falling into stagflation then?
Okay. Well, one of the reasons that we seem to be falling into this increase in fresh food and grocery prices is that the government has been using its influence, whether direct controls or mostly jawboning, actually, trying to make a moral case that the producers should not increase their prices, and that's probably kept the prices of a lot of these groceries down.
Okay.
Now, because the government has been weakened because of this scandal, a lot of these companies are using this opportunity to catch up on prices, I think. And it's going to be, I think, more difficult for government to use its influence to jawbone lower prices because, well, some of the problems that came about in this Choi Soon-sil scandal is government trying to pressure companies to do what it wants. So the ability of government to jawbone low prices may be permanently affected by the scandal. So that just makes more case for government to engage in transparent policies. I would start off with fiscal policies, but also things like regulations and make transparent channels whenever a government wants to try to influence companies.
All right. Thank you so much for your insight today.
Thank you.
And that wraps it up for today. Thanks for watching, and we'll be back tomorrow with more business news that matters to you. Until then, goodbye.